10-year Treasury note yields continue to trade the range. 5 out of the last 6 sessions, we've seen the 10-year note yield range between 260 and 270 on a settlement basis. Today was no different, although we were right in the middle of that range today until a very poor 10-year note auction came down the pipe, pushing yields towards the highs. But lo and behold, we stay in that range, and the market seems to be coiling, waiting for something to happen on a technical basis. We are just kind of waiting. We need a breakout below 260 or back above 280, I think, to really start to shake some of the leaves from the tree, we'll call it. And market volatility is reflecting that on a decline as we've stayed in this range. No fear of a breakout, no fear of any kind of uncertainty that we've been talking about, whether it's China, whether it's the State of the Union fallout, whether it's something over in the UK. Nothing seems to be rattling this market, despite the fact that yields remain stubbornly low. And if you look ahead, we did get the announcement for the Fed chairman's semi-annual testimony to Congress. That comes on February 27th. That will give us a clear picture. But we just heard from the Fed chair last week after the FOMC meeting, and we heard from a month earlier after December. So I'm not really sure if that's going to add anything to this market. What the market wants is resolution, from whether or not there's going to be another government shutdown, from whether China trade agreements can be put into place. Maybe it has to do with Brexit, or maybe it has to do with earnings and the economics here in the States. There is something that is driving this market. Equities are going higher, gold prices are kind of trading sideways, and Treasury yields remain stubbornly low. The pieces now will start to move as some of this resolution comes into play. Higher Treasury yields were expected, but now that the Fed's on hold, I don't know if we're going to get higher Treasury yields. Higher equity prices weren't really expected as the economy started to slow, but now things are looking more positive and they're going higher. So again, it's going to take some clarity, and right now the market doesn't get that. And I think that's why we're holding in these ranges in these riskless assets. Gold prices hovering near their highs, Treasury yields hovering near their lows, and equity prices just doing what they do, and that's being the buyer of last resort. So as we move into the second half of this week, I expect Treasury yields will probably remain in that range until we get some clarity. Right now, that clarity may not come until February 27th when Fed Chair speaks to the Congress.